202. Good morning, everybody. It's currently 9:39 in UK, which would be about 4 a.m. in exchange time. So we'll start off with the XY. I'm going to go straight to the markets for analysis, and we are looking for ideas of where prices are going. We had a very good outcome last week, good trades, and we're looking to continue that momentum. So moving forward, let's see. So yesterday or last week, Friday, what did we have? We had DXY dip into this fair value gap, which we've been expecting for price to do for a very long time. We have been kind of pushing for price to move towards this area, which it just doesn't seem like it wants to do right now. We have price that dipped into the midpoint of the fair value gap, which is a draw div from the high to the low. We just about made it to the mark, below, and then we reversed quite instantaneously. And we have had a slow kind of decision from the midnight session. So let's see if there's any news first of all. News is good because it means there's opportunity for manipulation. You can see at 3 p.m. we're going to have some PMI news. And honestly, there's no real way to tell if it's going to be bullish or bearish or not. It's been quite negative overall, especially from January, or I should say from March to this January. So this whole year was quite bearish. It's been bullish more so this year than it has been bearish, especially has been bearish just this last month, or at least at the start of this month. It was the first every month, so yeah, it will be last month, just the new month. So happy new month, everybody. So yeah, DXY dipped into this halfway point, pushed up, and it looks like it's just an indecision. So let's go to the weekly actually, see if there's a narrow outlook. I simply think it's the case of dipping into the fair value gap and then pushing up. So bullish. My main thing would be when we just look at the market structure. That's more bullish than I am bearish. The only thing is that this looks slow and the accumulation doesn't look like it's accumulated bias. We could even drop even deeper in. I just don't think that's going to be likely just because of the fact that we have a strong reaction from the area of the midpoint of the value gap, which is the hourly time frame on DXY. If you're indices, you can actually look at a smaller time frame. It still looks like we have bearish structure. One of the things that we have filled this bearish fair value gap. Yes, there is some sell side here, but I guess what I'll be looking for us to be bullish is a break of this swing term high up here. And then I would expect the price to come down to, I guess, a little bit deeper into the fair value gap. I do think it's more likely price goes up here than it does go down here. I would be bullish in that regard. So just had a pullback into this in the fair value gap here, which would supply a diff for some buyers up here. Let's take this into market. So I'm happy to literally get rid of everything. So from here to here, we have this kind of leg, pulling back into it. I had this side reaction to this one blue candle. This literally bearish after bearishness. and there is this one blue candle of which we come up into high, we come up into, and then we've kind of had a slow reaction to. I don't know if that would be enough for us to be bearish. Look at the weekly time frame. Weekly time frame, we have filled this imbalance. I still don't know if that's enough again for us to be bearish. Okay, let's look for some liquidity. We are in a premium. If I'm being honest, I don't know. Because yes, we've had this kind of idea of potential reversal, but I don't know if that's enough. Really. I mean, yeah, I don't think the way that I'm seeing USD CAD is like we kind of have to wait for one of these lows of highs to take now. But I'm not really feeling that right now. If I look at GBP lens of it. This isn't affected too much by the USD directly. So we can have a look at this just on the pair or with the pair itself rather than looking for this. So start with the weekly time frame. I could go down here. If I'm being honest, I would have to be more bearish than average. Yes, we take out some source of liquidity here. We didn't take out this kind of market structure low here, but we did take out these swing lows with the displacement. So we take leverage. We created some imbalances here and here. Let's come up to the echelon of it, upper echelon of it, and then reacted to it. But we haven't yet created this one low. So yes, we have a displacement, just a pullback into some of these value up to then eventually take out this low. Now these equal lows right here. Technically we could push up to any of these fair value gaps. There are quite a few. Let's mark some of them out. One over here. This one over here. So technically we could have this pullback before, but I am going to have to be bearish on the daily time frame, no matter what. because of the fact of the overall structure and the target of the imbalance that we're looking for. Is it possible, like I said, we go up? Yes. It's also possible we go down straight away, but without coming back up to these fair value gaps. Also, yes. Maybe we just grab this, maybe to go down. That's also possible. But the idea is that we're bearish. Now, you may think, oh, I've just seen this fat, big blue candle towards the upside. Sure, it's not really engulfed anything yet, but that's half of the day, and we've already got more than half of this fair value gap, or not fair value gap, this candlestick or filled in a way. So there is that idea, but I'd counter it with the fact that the entry model will protect us from this extremely bullish day, generally speaking. Not foolproof, not perfect, but it's reliable. Because for us to enter sales, we need to have a taken over buy side liquidity, then a market structure towards the direction I believe will go. So in this case, think of this high, for example, and then market structure shift from the lower side frame to the lower side. Of course, that may not happen when you have a strong bullish day. It could also happen as a fake out, but it's unlikely to occur. But we are bearish, not looking for that essentially. We're going to take that ideas into 1 hour. So once we've analyzed the direction bias, I then like to go to the hourly time frame. That's the kind of it's one of my favorite time frames. And then from there you go and look for an event opportunity, is what I call it. And essentially what we're looking for is just for 1 hourly, weekly high, equal highs, what we call those, hourly imbalances, hourly key market structure to then have an occurrence to do a time at one of these specified events. Or because what then happens is when we have an event at a specific time and area on an hourly time frame, it equals and creates an opportunity. Now, the type of event, the type of opportunity is kind of within the event. There's not always a guarantee, hence why I call it opportunity. Opportunities present themselves doesn't mean that they're always going to be the best one. Job opening, which is an opportunity, doesn't mean you're going to get a job. But the job opening is an opportunity for you to enter your CV to apply for a job. That's why the people with the best strategy and a consistent strategy do well. It's similar to that. So it's important to have a good model, to backtest the model, to be confident in the model, because it shows in the job place. They're looking through CVs and you don't have anything to show for it. You're just winging it. You haven't done research. They're probably not going to invite you back or even allow you to interview. Why? Because you didn't put effort in. They can see that. If they can see no effort, they reward that no effort with no job. Similar to the marketplace, where the marketplace sees no effort in your strategy, sees no effort in your studying and your backtesting. Excuse me. Then guess what's going to happen to your trades? You're not really going to see much profit, because why would the marketplace pay somebody that doesn't know what they're doing? You rarely see that happening, and when you do, it doesn't last long. Second thing is, okay, let's say we have effort. Effort doesn't mean guaranteed success, but if you put in effort, you've studied, you've got your qualifications, you've dressed up your resume, looking good, you can apply to 10 companies and 3 accept you. But the 3 that do accept you, well, maybe 3 and a job in itself would have a salary that will pay you for a certain amount of time, for a certain amount of length of time, which will cover the losses of not being employed. Because the biggest loss you get from applying for a job, at the end, you say you get rejected, is nothing. You don't lose a thing because you never had the job in the first place. So it's a similar way we should be able to treat our losses, that it's not really a loss, it's just the price of being successful. Everything has a price of being successful. In trading, this what happens to be in the form of losses. But that is a negative way to look at losses if you don't know what you're doing. I mean, if you know what you're doing. If you know what you're doing, a loss is just a price to succeed. If you don't know what you're doing, it's just a more expensive cost, right? Because at the end of the day, you're going to keep paying that high fee if you don't know how to fix it. And that's why you treat losses with respect and no respect in 2 ways. How are those 2 ways? possible and capable to do simultaneously. One, you kind of, and I would say study mode, reflective mode, and market mode are kind of the three modes you have. Study mode is what you do before you even enter the markets. You must know what you're doing. You practice your strategy. You use a demo account to practice and the feeling of seeing money go up and down and all these types of stuff, right? Study mode. You study when you are learning a new model. If you're a seasoned trader already, you study when you have free time, you're on the weekends, and you still want to work, or it's out of trading hours and you want to be active in the markets, you can enter study mode. Study mode is literally where every new piece of information is untested, but at the end of the day, it's information and data you want to be prioritizing. And that will then point you to an answer, a question, or something to move forward. Then you have market mode. Market mode is when you're actually in the markets. This is the place where you treat losses with no respect. Why? Because you are seeing it as the price of success. When you see it as the price of success, you are happy to pay. People are willing to spend millions or it's even billions companies on acquiring a company that they don't really want. Why? Because it knocks out competition. So it's the price of them succeeding. So a company like Coca-Cola may see a drink coming onto the market and try to buy it, not necessarily because they like the taste of the drink, not necessarily because they want the company, but because they want the success of their own company, so they're willing to buy out their competition. And that's where you will see Coca-Cola, Pepsi, what's the other one? Dr. Pepper, and there's probably more that you probably, and maybe even Fanta, are all owned by Coca-Cola. So we're out here arguing which drink's better. Meanwhile, Coca-Cola's smiling because they paid the price of success, and what's the result of it? We're all arguing which one's better, but they all are owned by the same person. So that's why losses are not respected. Is when you're in the markets, you can't do that because if you respect it too much, it affects your performance, and you need to keep your psychology in check. So it has two purposes. One, it allows, or mainly one purpose, that it allows your psychology to be unaffected by losses. That's the whole purpose of not respecting losses. Now, when I say not respecting losses, it's not that you lose money and then you now chase because that's you respecting the loss. That's you saying the loss is controllable. The only thing you respect is your rules, right? Nothing else. You don't respect your feelings, nothing else. Feelings die at the place of the marketplace. As soon as the market opens, your feelings should be dead. Because if you live by feelings in this marketplace, even in life in general, you will lead to destruction because feelings are that fickle. Now, we've done study modes, market mode. What was the third one again? Reflect mode. Reflection mode is where you respect losses. This is where you look at losses as if they are an enemy, as if they are a disease, where you look and try and find the root cause of it and try and see it as a problem where you're trying to find the solution to it. Because this is the best place where you are in reflective mode and your feelings are automatically unattached because you're not actively in the market, there's no real money involved. This is going to be prevalent in the study mode and in reflective mode. It's super difficult to control during market mode, but it is an essential tool to learn eventually. But in the meantime, especially when you're learning, even as a seasoned person or seasoned trader, it's still effective to do this. Is to have moments of reflection where you look back on all your trades, you journal it, you look back on them, and you come to a conclusion on why you lost. When you come to a conclusion on why you lost, you can then determine whether it's a psychological reason, whether it's a model reason, or whether it's your poor execution of the model. And what that then allows is that you then understand why you lost. When you understand why you lost, you can then fix the why, and then you can then increase your probability of success the next time you enter the marketplace. Why is that the case? Well, because when you're reflecting losses, let's say you have a loss and you then determine it's because you didn't follow your trading plan. And there's multiple reasons why you can have followed the trading plan. Maybe it's in the model, you forgot. Maybe it's a psychological reason, you saw the market moving too quickly, so you didn't want to go through all the checklists before you entered because you saw price already start to move, right? Those are both losses that you have and do, but they're for two different reasons. So the first reason you lost right there was because you didn't follow your trading plan because your model. Okay, well that means you're too premature in the market. You need to learn the markets more before you actually start going into the markets. Because if I'm not following my trading plan because I'm getting it, really understanding it, whatever reason may come up with, I need to understand it and not forget. So I can avoid silly losses. Even if you win, right? I'm just focused on losses, right? But just a nugget. Even if you win a trade, you need to go back and make sure follows your trading plan. Because what then happens is if you win money following a bad strategy, you are enforcing bad habits. Because there's nothing that says you're doing a good job than a blue or positive trading day or positive trading outcome, right? And that can sometimes be a bad thing because when you're getting rewarded for a bad behavior, it will enforce or allow you, or maybe you may think you're doing a good thing, then in truth you're being not. In truth, you're not doing a good thing. Like brainwash. If you reward something for doing bad things, it will do bad things more. Okay, so that's the first reason you may be losing the trade is because you're not following your training plan, and that is something you can fix. But how do I know how to fix it? Because I then went back over my trades. I looked, did I follow my training plan? And I looked at my journal. I said I was feeling fine. I was confident in the trade, and I did everything correct. So in that manner, I would then be in a way knowing that okay, it's probably not psychological reasons for me a different course. And that's how then I was able to then go over my training plan and then see, okay, wow, this loss didn't follow all of the checklist. I made a mistake. Another person may say, well, I didn't follow my training plan. Or maybe I didn't follow my training plan, but I was very nervous entering the trade. Why were you nervous? What did you do as a result of your nervousness? Maybe you came out of the trade earlier than expected. And the trade didn't even hit your stop loss. It just went into drawdown and then it went your direction. Maybe you need to trust your stop loss. You now start to ask why to the losses and treat them like diseases and problems, you will then you won't stop until you find an answer. It may not be the right answer, but at least you have an answer. Once you have an answer, you can then look for the answer, or you find a question rather, or a concern, or a conclusion. You can then draw an answer and a real solution you can take into the marketplace from the reflective place. So all these three environments are important, and it is your goal to enforce or what's the word I'm looking for? When you draw something out of something, like excrete, but not excrete, like you're trying to extract, that's the word. You're trying to extract the best information from each three zones. In a study market or a study zone, you're trying to extract the best possible model with the best possible results, with the best possible strategy to your ability. In the marketplace, you're trying to extract as much income, revenue, money as possible, right? Then in the study reflection zone, you're trying to extract the most answers, the best solutions, the best analytics data from your performance to then use for the future. So you're trying to extract the best from each session. So that's not what then let's go back into the market. So I'm not actually too sure why I brought that apart, but I'm taking out this window, came up here, didn't break this high, so we have a lower high here. We displaced breaking this low, this low, we are definitely bearish. We are currently having a bullish outcome. We've drawn the daily fair value gap over here and the daily fair value gap over here. So now that you've seen it, I personally like to use a horizontal braid to knock it out. And I have a template of the marine version. So I'm going to use that to mark out this fair value gap over here. Let's go get to this one before we get to this one. So I'm going to look at how price reacts to this. Now it's very plausible. I'm not going to lie, it is plausible that we are bullish up even here when they come down. Like I said, we can even sweep the previous day high before we continue going down, right? That's possible. What is more logical? It's more logical for price to come up to this fair value gap because this is where the optimal trade entry is, the 6.2 and 7.9 level on the Fibonacci, which will be lined up almost perfectly with this fair value gap here. So to come up to around the 7.5 level to then come back down is more plausible. We can also see that price came down here, breaking this low, continuing this bearishness, pulled back very close to the original high to then displace it further. And we also see another example that here where we came down to this low and pulled back almost equal to this high to then displace down further. So if we're expecting that to continue, then it'll be plausible to think that this pullback up here is also plausible. There's also an order block right about here on the day time frame, which lies at the 6.2 level. But like I said, it's going to get through this before it gets leaned up here. So we could be bullish, but I would wait and see before I want to enter buys for now. If I'm going to counter trade trades, it will definitely be short, low term, low hanging fruit that I'll be targeting. But for now, let's see. So I would like to have an event opportunity or event happening or event occurrence on the hourly time frame. So we've got the area we are looking at, or area of interest, which is this daily fair value gap. and we want to see price get to it first, and then have a market structure to the downside from it. If it doesn't do that, then we can say that okay, we might be bullish to the upper kind of zones before we take out this area of liquidity down here on the daily time frame. So we would expect price to pull up. But now it's possible price reacts to a level that's not the daily fair value gap, but that is unlikely because I don't really see any. I think we have zone, but like yeah, it's kind of what I'm looking for on these time frames. So I'll keep this in high interest for us. Let's look at EU. So last week we were expecting a push to the upside to take out this liquidity, then push to the downside and market to shift. And we will be looking for sells, which you can tell by this red arrow. Why is that the case? Well, number one, we had this easy buy, which is very, very clean. But we also had this, what was this daily? I believe this is a daily value gap. Let's use this to mark it out. Okay, so we had this daily fair value gap, which we pulled up into. Then we had these equal highs. So the hourly event, we had a push up to this area, and we had a reaction. Now, in that reaction, we didn't actually have a market shift on the hourly time frame. Did fill though this fair value gap, and we did fail to take out some of these swing lows down. So hourly time frame didn't really have a good look. But like on the smaller time frame, we could have probably entered some sales things like fruit because we did take out swing lows. You can see here we've been kind of bearish ever since. But like I said, it's probably not something I'm looking at. I would ideally want a hourly occurrence of the structure break. So we've pushed up in the daily fair value up, we've shook highs, we pushed down, we haven't yet to mark us with a shift with a displacement. That's what we're looking for. Now, next best thing will be time. So around 8:30 New York Open, we're expecting maybe this actually won't come the midnight session, so that should be around two. Mark out two areas of time that are important. So it's the midnight open. Yet to actually see the market open, but midnight open and we just rallied up. So this could also be part of the power three, which is the early manipulation slash accumulation. So that would be essentially be us expecting price to rally up, right deeper into this kind of area for value up here, and then price to deliver to downside as it's taking us a buy side liquidity. Again, I would need the event to occur, maybe even deeper into this fair value gap and take that out. But that's not okay. But yeah, we kind of already had that sweep and we push into fair value up. But it's a little bit more clear. I'll put this in medium interest because it's not as clean because the event happened last week. Same thing we was expected for GU. Again, it didn't happen. That's how I'm looking at. Yeah, this is the equilibrium here. It shows that equilibrium, which is interesting. Also came back up, closed right on the equilibrium here. You know, let's help bring it. This stuff from this. That's the equilibrium here. So over here, since it's bullish for value gap, didn't exactly have an hourly market structure shift, but we did deliver some more time frame. The last week ended weird. It's like last week Friday, it gave us the potential for many opportunities, but there was actually none because markets were closed. It was weird. Yeah. This is the trade I took. It was off stream. Use the card. That with me. In the time for GMT. So four, four. I was making my own trade. What's a 7 o'clock? Oh, what's that? So I'm guessing we had this monthly shift. Go back into hourly February up here. Let's figure out the trade I took last week that double my account. It's fair. We have to zoom in. Is that going? Yeah. This is hourly February. Right. The monthly shift. Go back. And then look at the so let's see what we're going to see. Here's not an hour. Not woke up. Give me what do you want to go? Dang it, I didn't record it either. Anyway, hourly February got market shift and it's tilted downside. Man, I wish I knew exactly the levels. Yeah, it is. Yeah. But anyway, on this, there is quite a few areas which we could use before the daily fair value up. That is these over here. Over here, there is some inside the daily fair value, which I think is more plausible for us to get to. There are these areas. So this is a different area because of the whole fair value up. This is another one as well, but it's a midpoint of where's the midpoint of the midpoint of the. Oh, actually, this is actually just that's so weird. It's the midpoint of the daily fair value gap. And there is, of course, this one up here, which is unlikely, but possible. Okay, okay. So there's the idea that we're looking for. I don't think price will react from this when there's a fair value gap right here. I think I might as well get into this before it goes down, which is my main thinking. Here, not only there is a fair value up here. Now, DXY is an interesting one. because, like I said, there's this high, this more bullish, but I would like I'm not surprised the price was to go down, take up the slow deep into the value. Like it's very possible, you know. So I can't just say blind bullish, but with this arrow hourly fair value up, we did fill it, take out probably some buy side liquidity. From that area, we then had picking out this low swing low here, this move. We didn't have a pullback, but the timing of what happened is non-decision. Very non-decision actually. And probably, and we actually look presented from here to here, being if a value up. I know I didn't reach. We probably would not have got entry to it, but I did. We can just do the look as the area instead. Okay, so we can to move on that on the block, the reaction. I think we keep that medium just for the sake of another possibility entry around more company. Look at this, looks like one bullish. You know? Here, looks like bearish. She just pushed off from this bullish for value gap. We could have been to some value, but the Monday is a bit weird because so little data and when there's gaps in the market, it just messes up the flow sometimes. Let's have a look at GJ. I've looked at this in a while, so see that we're moving up quite a lot. Again, it's quite just looking weak. It just happens moments. Don't say that much. These volatile things. We just had this push the downside and on this swing low, but we didn't create a low in terms of the grand scheme of things. So it's not enough for us to be bullish, but it's enough to say that there's a balance. It's interesting, this imbalance is probably the fuel for price to be bullish towards. And I do believe the price wants to continue this bullishness. It's just history. I'm looking at it, history. It's just been some did something like this, we slowly ran up the previous old high. So I would expect something like that to happen again. Of course, it would have been better to get in earlier, but it's what it is, right? And this is the thing. We are in a disc premium. It's deal, but again, we look at the idea, the general idea of this. It's just more about to that marine. Okay, I'll do that. We use this box to show what we have left. That's the bit we haven't done yet, and we very much could. Let's put these on here. It's another time thing. I mean, we kind of we can't classify this as a sweet note. Probably not, especially when I have these lows down here. Create equal lows down here. I'm slowly pushing up, but then I'll be really bullish on it. Tough to say. I wouldn't be entering. I'm not really like playing on some of these types of things. Yeah, no, of course, the first week. Ooh, that was a very good week. Yay. on the 10-minute time frame, we've had that shift. The only interesting, it's not fair value. Only this one's confirmed bullish. That would be confirmed bullish, but okay, just be like it's bullish. I mean, obviously the best entry would have been up here, maybe. I don't know if I would have counted that as entry on this time frame. Taking out this swing here, but we haven't taken out with a mark displacement, which is the sad thing, I guess. On this time frame though, we do have the market transition. Getting in before fair usually not necessarily perhaps because it's sensitive like that too. Alright, well, passing some rows. So the leg I'm interested in is from here to here. Main reason so far is just simply because on any other time frame, we haven't taken this out with the displacement too, we have a 5 minute. That should end something a little bit lower from this time frame. The 5 minute time frame is 6:15 again. Yeah, the 15 this is not displacement. So I would have to put a 5 minute I would use. I kind of stick to this kind of stick. I can enter this lower area here. And something like this, the first kind of stick is here. It would be a deep kind of stop loss. This is a wick. Here we look 1.5 pips more. Then we'll be targeting from these slow hammer fruits right here. It's like look at those right here, and then it's gonna go right here. Some here. Taking maybe some partials here. Overall idea though on target is on this window right here. Yeah, this. But although that's the 1 to 9.5 and it's quite I'll take some partials here and here. So this is the kind of we're gonna have to depending on the shape of price we will come out fully here in the vibes, but that's what we're talking about. It just moves to high interest. Had the occurrence at the area of interest. We've had that taken off the swing low, the sweep, or the pull back into the 05 where they got displacement, breaking structure, and of course we want a retracement into a key area, which is equilibrium in island belts like so that is yep. This is what we expect for GBP. The Euro USD. Can enter that. And it's still pass. GU should be doing something similar, but I don't like GU. We have to be more traditional in CU, so I'm not that. GA, I'm not exactly certain because we've technically had that 1 hour shit over here, but we're just gonna continue. Just yeah, I might have a look at it another time. And again, those won't be sitting up to me. So think I'm just gonna focus on the one that looks good and it's a pair I'm quite familiar with, which is USD. So I'm looking for something like this. To be joining my trade now. And if I was streaming, I'll probably just send a letter to him and just check, send a different time or whenever, basically. But it's an about page, man. I was sitting here. Bye. Okay. It's a slow moving day, I guess. Indies like 20%. Oh, yes, it's now catching up to you. I feel that is. Okay, we got a little bit of reaction now. Rod is if we don't get to this point, well, we don't get up to that area, then guess what? We never go. We have to have so much confidence in our strategy. There's a lot of things you need to learn in your study session. One of the things is that you need to be comfortable with however many opportunities your training plan style gives. If it's one of those training styles where it isn't giving you an opportunity, you have to be comfortable with not entering many trades. The counter to that was to have a lot of capital because let's say you enter in a month, you enter 5 trades. Let's just say about one a week. That's 5 days looking at the markets, only one trade you take. That's not much, right? Compared to more intraday trading and such stuff. So you're gonna have to be comfortable with missing many trades. Now, in that manner, it is very painful to have that type of strategy and then miss the trade due to something like maybe you're busy or you're just see the opportunity or whatever it may be. Because you have to wait another week in hypothetical moments. So you have to be comfortable with whatever your strategy is, or you have to first know it. If you know that okay, my strategy only makes roughly an opportunity a month or a week, I need to understand that and put things in place to first of all capitalize, but try to miss it, and then also be comfortable with the fact that I may miss it. And this is a part of psychology a little bit. But my point is that you need to be comfortable with whatever it is and know it because if you don't know it, you're not comfortable, you can just force yourself into psychological torment you don't need to. For example, a trading style is only one a week opportunity. It presents itself once a week, and you are a type that likes to the equity in the market, you have your capital, trying to grow an account, possible, obviously without over trading, making your high leverage or whatever it may be. Excuse me. You then have a trading strategy at the start that only has one opportunity a week. What happens if you miss that opportunity due to something like you forgot or you woke up late or you just didn't see the opportunity or you missed it completely, whatever your excuse or reason is it's going to be painful. You're more likely than down the markets looking, hounding for an opportunity that's not really there, forcing it to the point where you then take a bad trade that's not exactly what you're looking for, but somewhat. And when that trade loses, it sucks even more. And sometimes it can even lead you to more trading. A man without rules is a failure of a man. Because if you don't have rules, what's your standard? If you don't have a standard, you are open to anything. They're saying about being open minded, right? And I think it's a good thing to be open, but it depends how you open. Like I have an open house, but it's not everybody that can come in, right? Family is I think this is for most people can relate to this, that you have an open house to family members, to certain types of people. If you had an open house, literally your door is always open. You're going to allow strangers, people you have bad intentions in, because you don't have any filter of who enters the house, or in other words, any rules of who enters and who doesn't enter. So because of that, you're open to good and a lot of bad, because bad is a lot more common. In that, or look into trading, or just life in general, when you're open minded, it's good to have an open door to the right things. It's a skill set that you need to have to be able to filter what comes in and out that's good and what's not. The best way to know if something's good is to be good yourself. It's like, how do you know somebody? I can spot an Arsenal fan a mile away. Like, it's just in their demeanor. Why? Because 22 years we hadn't had a single trophy. You tend to be humble. Now, obviously, it's not always going to work. It's not always going to be accurate, but it is the skill I have, right? And you can kind of tell in the demeanor of a person generally what team they support. If they're walking around like they don't have a care anymore, they're probably a Real Madrid fan because they've got like every trophy under the sun, right? I've had a friend that supports Real Madrid actively, and that guy he's just having the world. He doesn't even care about football that much because he's won everything. Oh man, what's my point? My point is that whenever you have an open mind, it's important that as open as your mind is, you need to have a skill set to filter what is entering in through this open mind. Because if it's too open, you'll be opened up to bad things. There's more bad than good in this world. So if you have an open mind logically speaking, more bad things will be entering your ideologies than good things. So you need something to filter out the bad things, which will be a pre-existing good, which in my case is the Bible, something that I know is good and is pre-existing, meaning that it stood the test of time. And then you will need other skills on top of that, which is the execution of being good. Love your neighbor as yourself is one of the examples. You have to love yourself first. Otherwise, how are you going to love your neighbor? Right? So love your neighbor as you love yourself. That there is teaching me to love myself. Because if I'm meant to love a neighbor and I don't love myself, how can I give what I don't have? So step to loving somebody else is to love yourself. Why is that important? People may think they love people more than they love themselves, but I would call that not love. Like those people that will happily give up their life for another, or their priority is somebody else, like a child, right? That's 100% true. I have no doubt that they believe that. But you have to love yourself and then be willing to give up that love for yourself for somebody else. Otherwise, you're not loving the person properly. Because if you don't value something, it's like this. If you don't value a car, it's a much easier to give that car away than it is to have your dream car and give it away. Just logically speaking, right there, what's more of an act of love? Giving away a car that you don't care about, giving away a car you really care about, your dream car. It's gonna cost you more to give away a car that's super valuable than a car that is partially broken because it means more to you. So yes, both people may be willing to give up their car, but it's going to cost somebody one person more than it is going to cost the other person. One has a broken car, one has the dream car. The person with the dream car is gonna hurt them more giving it away. The same way when we love somebody, two people can give up their life for somebody, but not both means that they love the person. The true test is that you give up a life that's important. You're willing to give up your life for some to protect somebody else, but you have a very good life. You have good income, you have a good job, you care about life, you're super joyful and grateful in the morning. You're a good person at heart, but you don't want you have many dreams you want and goals you're yet to accomplish. Why would that person ever want to give up their life for another? They wouldn't, but they still do because it's an act of love. Somebody doesn't care about their life, has nothing going for them. They don't even want to really live, right? It's easier for that person to sacrifice themselves for somebody else by a matter of value. So that's what it means to love your neighbor as you love yourself, because you may not love yourself and be able to love somebody else, true, but the value of the love you're giving them is not going to be valuable. They may feel like they're loved, right? But it's not. It's a bit difficult because you can't measure these things, right? Somebody is not valuing themselves could be the equivalent of somebody else loving themselves. So it's a bit difficult to kind of place a blanket over this topic. But my point still stands that when you, as a blueprint, it's better to love yourself then before you then love somebody else. Always, 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 always. It also helps you value yourself too, because when you love yourself and someone mistreats you, even when you're loving them the way you love yourself, you know that you don't deserve it because you have a good standard. If you don't have a standard, you're more. It's so much easier for you to be abused and accept the abuse. Because sometimes it can be unknowingly. Like not all type of abuse is going to be loud, right? And as a result, you're not always going to have the ability to. That type of person may not have the ability to step away because they don't even know they're being abused because they don't love themselves. For them, it's like, oh, it's okay to say things like that, those negative words about me, but the Bible teaches you the power of life and death is on the tongue. We don't speak negatively about one another. We're getting philosophical because we have no opportunities in training. So we actually come up to this on our fair value gap over here, but like I said, I don't expect price to reverse from here because it's quite close to this daily fair value gap where there is a fair value gap within it on the hourly time frame, I believe, and then that also lines up with the which is that blue line. Let's put that first. EU has had the displaced below these kind of lows, and we are using that leg on the 5 minute. And you can see here we have a feather up here, and a feather up here. Both of these two kind of moves, tick at one and two swing lows into this bullish feather gap, which I'm hoping will push price up back to this level here, which is about the halfway point from that extreme to this extreme, which will be our optimal trade entry. So this will be above that whole leg as a whole, and then we'll be targeting lows down here, which is just a swing low, not any equal low of commands, but which would also be taken to partials by these green lines, since those are areas of sell side liquidity. But of course, we need price come to entry before that. So yeah, those are two pairs, my favorite kind of analysis. I haven't analyzed much. I've analyzed two from six. These six pairs is what I've looked at. And this is the two I'm liking the most. Not that there isn't opportunities in others. I'm just liking these ones out of the others, and I'm not trying to analyze all of these right now. So I'm gonna focus on what's in front of me, and then as the week goes on, I can then start looking at some other opportunity. But for now, GPSD, USD, two looking at. That's what we're waiting for. And then I haven't really streamed much a couple of weeks because I just go come on the markets, look at around, is there anything going on? No, I like to do something like that. So Then I want them to spend a little bit more time with that. We'll be able to potentially get a live entry. I think the past last week we streamed, and then at the end, not too long after the end of the stream. But they'd like to show them I don't start stream, so just a bit more time. This is how to end this. If we get it by a certain time, I'll just leave because I do have places to be, I guess. God is good. God is good. Think about his child. So I hope you guys also learn into the discipline of not rushing in. Like we're very patient. Price could, if you can see, this looks like Price get away from us. We're just calm, collected. We have a rule book, we have set of stone values, and you gain this confidence from believing in a trade, trading style. If you don't believe in your setup or your trading style, then change your style or change your belief. You have to believe it. If you don't believe it, you're going to fail 100%. When you don't believe something, you'll never obey it, never live by it. If someone doesn't believe in God, they live a life where they don't believe in God. Is that not as simple as? But it's either they need to change their beliefs in God because obviously he exists, but they need people you actually have to believe in him for any of his words or will to be effective upon. You say, oh, why doesn't God do this? Well, you don't have belief. What's God meant to do, right? But more importantly, or just as importantly, to change your belief in the system, change the system. You know, I don't. But what's the word when you can? What's the word where you put your name on the line for something else? You're so confident in something, you put your name on it. Saying there's a word for it. Right. Yeah, vouch. Yes, back in. I like the word vouching. Therefore, I'm not vouch for any other God but Jesus Christ as the living God. However, the idea of what I'm saying is you change your belief in God or you change the God you believe in. If your religion is not working, it's either your belief is a problem or your religion is a problem, right? So, personally, I can only vouch for Jesus Christ being God. I can tell you that my religion isn't a problem, even though it's not really a religion, it's more a relationship. It is my belief in Him that will ever be a problem. Why? Because I've had good belief and I've had good results. The word has said a thing and I've listened to it with the belief in the heart. In fact, the Bible even says this in Hebrews 11:6 that without faith it's impossible to please God. So God exists, our faith exists. Both of those two things are key. If you don't have faith in God, you cannot please God. And what's God going to do? Because Isaiah 55:11 says that his word accomplished what he pleases. So his word won't work for someone that doesn't believe, which is wow. Thank you, Holy Spirit. word of God does not work for anybody. It works for God because that's where His word accomplishes it. So if you don't have faith, cannot. The word cannot work for you. Just like let's see. I only have one left. Okay. You can't actually take a move because this spins. Next, I think it's the one more, yeah. I did three last night. And then let's do a quick warming up. Yay. Mm. This is trapped. This could be denied. Bishop. I didn't think about that. Let's do this one quick. I think. Okay. Yeah. Yeah. Oh, no. You can take that. Let's go. Oh, easy. That's the title as well. Boom. Okay, it's looking good. It's going the right way. Goofy and the second get quicker to where we're looking for. Could we enter a buy towards where we're looking for price to get to? Probably could have, but I don't think so. Now is the right time. Maybe if we get a reaction from this one out of the but then again, that's still probably will be. I'm kind of just chilling around this area right now. I see each kind of stick with me 5 minutes. 1, 2, 3, 5 minutes. It's just been around two. And every time where we enter this random price is which is not. Even though mm, even though we're expecting price to get to this area here and then potentially go further down, it's also plausible since we've just had this very deep bearish move. It's also plausible price goes up to around this area because on the daily we only knocked out this, but there is also a trend entry there. Which lines up there onto a trend entry. So it's possible we go up. I don't want to keep it because you can get a bit confusing. Okay, again, looks a little bit actually. Oh, jeez. Let's just sort some stuff out. Right. So we don't really get an entry model. We the prices like the already up. Okay. But we can't enter it. We see the woman there. Even if we use the 1 minute, we couldn't enter. So, mm, okay, good, but it's gonna be impressive with it. I like to use the highest type available. Yes. Maybe like 10, 15 minutes more if we don't get any entry models or entry, so then just wait for the quickly. Another thing to really do sometimes is just look at some of these parts. Analyze these side quite. She was best time. Oh, my days. I want to video. Just to record the from the arcade in the hospital. Just stream missing. Oh my goodness. Maybe we randomize or something. So this one we technically swept the here. Following that sweep, kind of been like in a rush mood. Interesting is that this is the opportunity itself, you know. Will it continue? Is the question. Now we do have the legal bias, but the dizzy bias over here, and this leg to the snow. Shoulder, very shoulder over here. Super. This is just low hanging fruit type of vibes. No. Well, that, because it's just a little. Oh my gosh. Aliens, they got some of these signals. We could be bearish for a short time. We are bullish for a shorter time. But on this leg, if we look at the overall move, for so long, so we're in a discount, so buys are plausible. We've had an event. Interesting. We're here for. This is disgusting. Makes me even. This is actually nice. Oh, this is not bad. He's been even kind of clean recently. These ones are pretty nice. That looks so bad. Look at the big sparrow clip. Look at it consolidate. Tracement here. Hey, hold on. You have images, right? This is hilarious. Give me this one. You have images. No, there it is. See? No, it's not like it's not big. I'm building this up to industry books. The father isn't working. No, 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 no. With this whole price. Mm. No, we have any reaction to this. Oh, that's not what it should have. Wait, what is that? How is it two gaps? That's expected. That's not interesting. Go, go. Let's go, let's go. Rocket. Go, go to entry. Go to entry. Oh, oh, No. No. This is way too bad. Users will down here. It's still probably for us to get entry though. Fair enough. This isn't true. Get in as close to the minute open as possible.
Can't wait to the Thursday. What time you get to?
Back. Right. So our blown isn't working. And it's like 12 something. Market opens at 1:30. I could stream to 1:30, but I'm literally not doing anything. So there's no point in streaming now. So don't watch off stream. I don't have energy to go through these pairs. Because again, I don't trade them like that. So I would have to really deeply start analyzing the lack of context I have. I have context through USD, which is why I can, have my this is there already. Yeah. See the this. That is disgusting. When price moves like this, I despise it. Really. Though there's a lot of equal lows over here. I feel what I always say. Could be some movies on this. Okay, I might not listen to shit. No, no, go up, but Whoa. Jeez. Shouldn't be able to get it from here. What happened? So, anyways, all right, peace. See you guys tomorrow. Probably like tomorrow. Yeah, but CJ, I see you in the 85, I think. Could be.